Hey everyone, Atia the Savvy Accountant here, and I wanted to go live to discuss a topic that is coming up a lot, and I wanted to do a quick video to explain some of the misconceptions. So LLC versus S-Corp, these are different entity structures that you can elect, and once you elect the entity structure, then you can determine how you're going to be taxed for the IRS. So you can elect to be taxed as an S-Corp or a C-Corp when you're an LLC. So I just wanted to discuss some of the differences that I see going around, and I hope this video helps clear some of that up. Remember, although I'm an accountant, I'm not your accountant, so everything that you see in this video is for you to use for informational purposes and for you to go speak to your CPA or your tax preparer or your specialist that you're working with to make sure that the scenario that you choose for your business is going to be the best for you and not just based solely on what this video reveals. So this video is for informational purposes, but I wanted to create it to go over the differences with LLC versus an S-Corp because I get this question a lot. And so I'm going to talk about the three areas that are listed here. So legal entity, tax returns, and how do you pay yourself? So that's a big one that a lot of people just want to know answers on. And so for the legal entity structure, the purpose of setting up a legal entity is to separate yourself from the business. So I'm not going to be talking about the sole proprietor part because with the sole proprietor, you're able to operate your business, but it's, as it says, it's a sole proprietor. So it's under you, you're the sole owner of it, and everything that you do from the business is going to pass through to you because you're doing it in your own name. So I'm talking about when you actually create a separate entity, you create this legal entity, you're going to get an EIN number, you're going to file the proper reports, the proper paperwork with your state so that you're able to separate the entity from yourself. And so the differences here are the LLC is going to have what we call members. So the people that you created this LLC, you're going to be a member of the LLC versus an S-Corp, which is a corporation. So it's a different entity type. It's going to have shareholders. And so both of these are going to satisfy separating you from the actual business. So what that means is that the entity itself can be sued. It could enter into trade and commerce on the open market in the actual entity's name. So it's separate from you, even though you might be the only owner in the S corp or the only member of the LLC. You are actually doing everything that you do through the LLC or the S corp is through its own entity structure. So it's considered a separate legal being. And so that's the first difference that I wanted you guys to talk about. So they are both separate entities and they are separate from the individual that's actually running it. So next, I wanted to talk about tax returns and what the difference is with an LLC versus an S-Corp. So you guys have probably heard by now the phrase pass-through entities. So both of these are going to be pass-through entities. And what that means is the information, the financial information from both of these entities are going to pass through to your personal tax return. The key difference is how it's going to pass through. So with the LLC, it's going to pass through, the income and losses are going to pass through to your 1040 on your Schedule C. And what that means is all of the income that's going to be generated from the business, so it's going to be the revenue that you take in, less the expenses, deductions that you apply to the business, it's going to pass through to your 1040 and it's going to get taxed once you file your personal tax return. So the difference there between the LLC and your W-2 that you get from your job per se, it's going to be where it's going to be reported on your 1040. So they're going to be reported in different line areas. And I'll show you a sample tax return at the end of this quick presentation. An S-Corp, on the other hand, it's considered a pass-through entity. However, there are a lot of key differences that you want to take note. So your S-Corp is not going to be reported on your Schedule C. If there's going to be a separate line item on your 1040, so it does pass through to your 1040, but it's going to be passing through in another area, for lack of better terms. And so the way that it's going to be taxed is differently. So an S-Corp files what we call like an informational return. So you file it's a separate business tax return and it's going to be filed on the 1120S. And what that means is that you're going to be filing your financial information on the 1120S, but there are no taxes that are going to be paid on this business return. So the taxes are going to be You're going to calculate any taxes that are paid on this S-Corp is going to be passed through to your 1040. And you're also going to be paying taxes when you are paying payroll, of course. So we'll get to that later on. But the main differences that you want to note for the tax returns is that the LLC is going to pass through directly to your 1040 on your Schedule C, whereas the S-Corp information, financial information, is going to be passed through to your 1040, but it's going to be in a separate area. So they're not going to be treated the same tax-wise. The S-Corp is going to generate what we call a K-1 form, and that information is what's going to pass through to your 1040. So they both pass through to your 1040, but in different ways, and so they're going to be treated differently. So next, the topic of how you pay yourself. So as the member of your LLC, you're not allowed to take salary. And at this point, salary it's considered a deduction for most purposes. So when you are a W-2 employee, that salary that your employer pays you is actually a deduction for the business. And so now that you put yourself as the boss, the employer, you want to figure out ways how you can pay yourself. Well, with an LLC, because it's considered pass through to your personal return on the Schedule C, you are basically everything that the LLC makes is going to pass through to you. So all of the income and losses are going to pass through to you, and those are all going to be subject to the SE taxes, so your self-employment tax. And what that's going to include is it's going to be about 15.3%, and it's going to include for Social Security and for Medicare. Now the flip side of an S-Corp, when you decide to elect yourself as an S-Corp and get taxed as an S-Corp, the shareholders of said S-Corp have to pay themselves what's called a reasonable salary, and this reasonable compensation is going to be paid exactly the same way you would if you were employed like somewhere else, XYZ company, and they paid you as a W-2 employee. So you're going to have to take that reasonable salary, and that salary is going to include the same FICA taxes, but it's also going to include FUTA taxes, so the federal unemployment taxes. And that's going to be the main difference where the LLC versus the S-Corp, because with the S-Corp, you're actually, as the shareholder of the company, if you're doing everything the way that you're supposed to be doing and you're paying yourself a reasonable salary as you're supposed to be, you are going to get a W-2 at the end of the year for tax purposes in your personal name, and that's going to be coming from the S-Corp. And so you pay yourself via W-2, via salary from your S-Corp, but with an LLC, and the same as a sole proprietor, even though I'm not discussing sole proprietors here, you're going to be taking all of the income that's generated with the LLC, and that's going to be passing through to your Schedule C, and you're going to be taxed on that whole amount. And so I hope that clears up how you guys can actually pay yourself, because I know a lot of people, once they get into business, one of the main things they want to determine is how they're going to pay themselves. So if you are taking money out of your LLC throughout the year and you're taking money, that money that you're taking out is considered a draw, like a withdrawal from the company, and it's not a deduction. So it's not something that you're going to be able to reduce what your income is going to be showing as. That's literally just you be giving yourself an advance of the income that you are going to be earning from that LLC. So you're not taking it out of income, you're actually taking it out of the equity of the company, and it's not going to be considered a deduction for you. On the flip side, with the S-Corp, because it's a corporation and because you're considered a shareholder, on top of the salary that you're paying yourself, the reasonable salary, you're able to take what we call distributions or dividends from the company. And S-Corp is specifically designated where you can take those distributions and they're tax-free up until a certain point. You do have to make sure you're taking a reasonable salary before you can take what's called distributions and consider getting it tax-free. And it's only tax-free up until a certain point of the business. And I won't get into that in this video, but it's not fully tax-free. It's tax-free up until a certain point. And so you take reasonable salary and then you can take dividends from the S-Corp, and those dividends are not going to be taxed as salary. So you're not going to have to pay those taxes on the dividend that you take, but you do have to make sure that you're taking your reasonable salary before you can take those distributions. So I just wanted to give a quick example. So this is a sample return. They have 2 kids. and this LLC versus the S-Corp. And this is completely just a sample just to show you guys the numbers and how different things are calculated. So with the LLC, it's going to make 75,000 here. And let me see if I can make myself a little bit smaller so you can see. So here you'll see you're getting the deductible from the self-employment. And so I'll go through what that self-employment tax is on the other page. But the 15.3%, it's typically paid partly by the employer, partly by the employee. When you're an employee, it's all collected on your behalf, and it's part of your withholding taxes and sent to the government on your behalf as part of withholdings. And so you're getting that benefit of half of that portion back. And then when we go to the next slide, you'll see here. So here's where your self-employment tax is calculated on that amount. And you can see that it's about 10,500 based on the amount that was allocated. And so, I mean, these are all just sample numbers from the scenario that I took, but your tax amount owed is going to be about 15,000 in this case. So they didn't pay any estimated taxes and stuff like that. So this video is not discussing the tax piece. It's just showing you that your LLC versus your S-Corp on where it's going to be reported. So you can see here it's reported Schedule C. Here it's reported under the partnership real estate S-Corp Schedule E line. So the different line items are going to allocate how it's going to be taxed differently. And so we can see here that the tax is going to come through. There you have that extra self-employment tax that we discussed. And so your bottom line is going to show that you have a difference of the 15 versus 6 because of how it was taxed, because of that 15.3% self-employment tax that was allocated to the entire amount on your side as an LLC. So I hope this video was helpful for somebody. I hope you guys are able to see the difference with an LLC versus an S-Corp. Remember, this was just for informational purposes. In order for you to make that decision for your business itself, you need to speak to, it needs to be personal to you. So it's not going to be the same answer for everybody across the board. So I definitely recommend that you speak to your accountant, to your CPA, so that you make sure that you're doing the best scenario for your specific industry, for your specific business. Remember, I'm Atia, the Savvy Accountant, and while I'm an accountant, I'm not your accountant, so this video is not supposed to be used for you to make decisions, but it's more for informational purposes. So I hope you guys enjoyed this video. Let me know if you guys have any questions in the comments. Bye.